Welcome to the Aviation Insurance Podcast, the podcast that helps aircraft owners and aviation businesses learn and understand the complex world of aviation insurance and risk management. From the basic principles of aviation insurance to risk management techniques and updates on the aviation insurance market, the Aviation Insurance Podcast is your guide to traverse the world of aviation insurance. Now, here's your host, Tim Bonnell.
Well, welcome to the Aviation Insurance Podcast, where we talk about the fundamentals of aviation insurance. And today I want to talk about a topic that's not exciting to everyone, but often in aviation, in fact, very regularly, we enter into various forms of contractual agreements. Those agreements may be for the lease of an aircraft or an engine or a part on an aircraft. It may be for the lease of a hangar. It may be for maintenance services or all kinds of third-party services. And so in those agreements, there's typically language that it deals with insurance and providing evidence of insurance. So today I wanted to touch briefly on a very high level about some of those terms you will frequently see that relate to insurance. I will say again, as a disclaimer, I'm not an attorney, and anytime you're dealing with a contract, you should seek the wise counsel of an attorney, especially one who has specialization in aviation type of risks. But just for a high-level overview, here are some of the terms that you will regularly see relating to insurance in an agreement, a contractual agreement. So first, I will say this. There is a concept you will see that the contractual party will ask the other party to indemnify them. And so to indemnify means to restore them to whole, basically for any and all losses they may incur as a result of your doing business with them or your engagement with them. Again, this wording can be broad and can apply to much more, but indemnify is often a larger obligation than an insurance policy provides limits for or coverage for. So even if your insurance policy has certain limits and your carrier says, we agree to approve this lease, the insurance company is not going to agree to their approval of that lease is up to and subject to the terms, limits, and conditions of their insurance policy. So to indemnify a party is a bigger obligation than to say, hey, we will pay up to the policy limits. So just keep in mind an indemnification, number one, could be much more than the limits on your insurance policy. Number two, it's usually not limited to time. It could go on much longer than the terms of than the coverage of the insurance policy. So indemnity is a big thing. You got to watch that word because it's saying you're going to basically pay for anything, any loss we'll have, even if it's more than your insurance policy. And keep in mind that indemnity usually does not expire. So that's something you might want to watch out for, at least have an understanding of. Yeah, I'm going to identify you, and my insurance company's approved that, but my insurance company is not going to pay more than the limit described on the policy. So an indemnity is a big word. You got to watch out for it because an indemnity means more often than what your insurance policy may provide coverage for. Next thing you'll regularly see is requests to be an additional insured. So an additional insured is typically somebody who is using an aircraft, running an aircraft, providing you a service, and they want you to pick up their exposures for your use of the aircraft or you providing the service that they're utilizing, and so on and so forth. So basically, it's extending coverage from that party's policy to you or vice versa. The problem is it does not increase the limit of liability. So when there's a certain limit of liability, it's not increased, it is just shared, meaning that anytime you add an additional insured to a policy, the policy limits are diluted. So just being an additional insured on someone's policy may be not a good thing. That's why you want to make sure that you have adequate limits, either via non-owned or your own policy, in addition to those people you are doing business with. So an additional insured extends insurance coverage to the other party. If it's an airport or a non-service company, it said, to the extent of coverage afforded, then this certificate holder is included as an additional insured for liability coverage as afforded, but solely with respects to the operations of the named insured. So the insurance company is going to make sure that they're going to tie that exposure just to the person that they're insuring and not picking up exposures not related to that agreement. So anyway, if it's a manufacturer, there'll be other similar wording, but additional insured is something you'll see often. It's something that usually carriers will allow, but keep in mind, it does not increase the limit of liability. So it's diluting the limit of liability. Everyone's sharing the same limit. So the more additional insureds are involved in a loss, the less coverage there's going to be. Now, that brings up a couple other provisions that need to be talked about. Number one is severability of interest. Basically, there is typically a condition in the policy that will say that each insured shall have the same protection as if they were the only insured. However, that does not increase the limit of liability. What it's saying, so each person would have a separate legal insured. If they're an additional insured, a named insured, everyone's going to be treated like they're their own insured. The insurance company is going to owe them a legal defense. However, it does not increase the limit of liability. One wording might say each insured shall have the same protection as would have been available had this policy been issued individually to each of them, except that this fact shall not in any event increase the insurer's total liability beyond the limits set forth in the policies. So that's a severability of interest. If someone's asking for that in the policy, that's what they mean. They want to make sure that that they are provided an equal protection. Cross liability is something that will often be requested, and that's basically that the underwriters will agree to provide cross liability should one insured sue another, and that to keep them in compliance with that provision in a policy. There will also come up occasions where you're going to see the request for primary and non-contributory wording, and what that means is the party that's at, like for instance, in an aircraft lease, if you're the lessee, the person leasing the aircraft, the lessor wants you to have your insurance policy be primary and non-contributory to any other insurance. And that's because insurance policies will often say if there's more than one policy, or if this asset is covered more than one place, our policy will only cover an equal percentage. So in the event that two parties, when a company owns an engine, they're leasing to another company, and this company's leasing it, but this company still has some coverage. Their company could say, well, we're only going to pay half, and then the lessee's company would have to pay half. And so by saying that your coverage is going to be primary, it means you're going to be the first line on the policy. When it comes up, there's a loss, you're operating it, it's under the terms of the lease, your policy is going to be primary, lessee. And then also it's going to be non-contributory. So your insurance company is going to agree that this is the primary policy for that engine, for instance, and it's not going to be contributory. We're not going to ask for a share. We're saying that provision that's in the policy doesn't apply to this situation. So that's basically in a nutshell what primary and non-contributory wording is. It's saying that the other person, whoever's agreeing to be to taking insurance responsibility, who's the person responsible for insuring that asset, their policy is going to be primary, meaning the first one to pay, and non-contributory, meaning they're not going to ask the lessor's policy to contribute in the event of a loss under the terms of that agreement. So we got additional insured, severability interest, cross liability, primary and non-contributory. Another one that we'll see pretty regularly is called a waiver of subrogation request. The wording might say, to the extent the named insured has agreed to waive their rights of subrogation in writing, the insurance company has agreed to waive its rights of subrogation against the certificate holder. So what's this saying is that if the insurance company pays a loss for an insured, their insurance policy says that the insurance company is subrogated to, they get the right to go against the third party that actually caused the damage. What this does is it prevents kind of double dipping. Let's say an FBO damages an aircraft. It prevents that aircraft owner from collecting the damages from his insurance company and going back against the FBO. In this particular case, the FBO damages the aircraft. The insurance company for the aircraft owner pays it. Then they become subrogated. They get the right to step into those shoes to come after the FBO to collect for those damages. When someone asks for a waiver of subrogation, they're going to say that you and your insurance company aren't going to come back against us in the event we might cause a loss to you. So for the physical damage, your insurance company, even if it's our fault, they're not going to come back against us to collect the damages that we may have caused. And so that being the case, it has to be the insurance company that agrees to that. The aircraft owner, you can't agree to a waiver of subrogation. You can, but you're impeding your insurance company's ability to settle a claim, which creates problems in the conditions. It could violate the policy. So a waiver of subrogation really needs to be approved by the insurance company for that FBO, the airport, the pilot, whoever that might be, that service provider asking for a waiver of subrogation. But it's preventing the double dipping, collecting from the insurance company and the third party. And it's a risk mitigation tool for many aviation operations to limit their third-party exposures for damage they may cause. So you'll see a waiver of subrogation requested frequently in an aviation-related contractual agreement. Another one you'll see is a breach of warranty. This we talked about when we talked about aircraft financing insurance considerations. So if you missed that episode, I'd encourage you to go back. But basically, a lessor or a lien holder may say that, hey, we'd like a breach of warranty included evidence to us, and that's basically getting the insurance company to say if the named insured somehow breaches their insurance contract and the named insured would not be able to collect the insurance in the event of a loss, that the bank or lessor's interest would be protected. The wording might say the coverage afforded to the additional insured or the named person named in this certificate via this agreement by the policies in accordance with the policy shall not be invalidated by any act or omission, including misrepresentation and non-disclosure of any other person or party which results in a breach of any term, condition, or warranty of the policy, provided that the additional insured so protected has not caused, contributed to, or knowingly condoned the said act or commission. So basically said if the bank or the lessor, they didn't do anything to help violate it, that the insurance company would step in and pay back the bank. If the bank's been unable to collect and gone through a particular process, they'll pay the interest of what they would have paid to the named insured back to the bank. They're not going to pay the bank or the lessor the full value. They're going to pay what that interest is when the loss occurs. So that's what a breach of warranty is. Again, I go into a little more detail when we talk about aircraft financing considerations and insurance. So these are just some of the regular terms you will see in an aviation contract that will relate to insurance. And there could be more. There could be some more sophisticated wording, but you'll see these regularly as it pertains to service agreements, hanging agreements, aircraft leases. We talk about an additional insured. We look at indemnification. You'll also see wording called hold harmless. You'll hold us harmless and indemnify us. So you won't sue us for anything. And in fact, you will restore us to whole should you have a loss that affects us. If we get brought into a lawsuit based on something you did, you're going to make sure we are completely taken care of. You're going to cover all of our expenses basically and damages. So hold harmless and certainly the indemnification clauses are important to understand. And then we get into those additional insureds, severability of interest, cross liability, primary and non-contributory warding, waiver of subrogation, and breach of warranty. Well, again, that's just a high-level view of some of the concepts and terms you will see often in aircraft and aviation contracts as it relates to insurance. Sometimes these are phrased slightly different, but mean the same thing. So you kind of got to be able to read what those are. Again, just Googling these terms, you can often find good insurance definitions of what they are. But it's important anytime you enter into a contractual agreement to utilize an attorney. And it's always helpful when something's put in front of you, if you can recognize some of these key terms. And when you get a certificate of insurance, to know what it is that these terms mean. So that is all for this episode. Join us again next time as we continue navigating the waypoints in aviation insurance. Until then, enjoy clear skies and unlimited visibility.
Thanks for listening to the Aviation Insurance Podcast. If you found this episode of value, please share it with someone who would benefit from this information. Don't forget to subscribe in your podcast player so you don't miss any new episodes, and to help our show have more impact. This episode is brought to you by Aeris Insurance Solutions, your flight plan for navigating the turbulence of aviation insurance. For more information, visit aerisinsurance.com. That is www.aerisinsurance.com. Disclaimer: These episodes are for educational purposes only, and due to the changing regulatory and legal nature of the business, some information may change over time. Having a well-educated and experienced aviation insurance broker on your team is an absolute requirement to success in business and for managing your aircraft and aviation business risks.